Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Happy New Year to everyone. Hope everyone had a good holiday. We'll have a pretty quick session today. So what we'll do is just go through the market update, a couple of earnings trades. Those have just started. And Joe's got some charts and some analysis. So that's the plan. So the new year, so I just figured I'll start working strictly off of the new UI instead of showing the old one. um, for all the analysis and stuff like that. So here's the new UI homepage layout, and I sent the link in the chat in case anyone's not using it. Um, but so we have market overview and then the sectors, market pulse. We got some pulse statistics here, which I think are very cool to have, and just kind of the different transitions, trade alerts down here. And then we have unusual call and put activity on the right here. So pretty jam packed. Also, we have the link to the YouTube channel down here. So pretty jam packed page with lots of information. It's been 2 weeks since we met. Um, we're still in state one for SPX, Russell state one. If you look at the sectors, I mean, they're green across the board. So very bullish overall. Green pie, pretty much really high, elevated 80, almost 84%. And then the big one is state one. So, over 45 is, overbought. So we're definitely overbought. I mean, if you just look at the green pie and state ones, we're definitely overbought. Down here, you can see we have these statistics. So we give you basically like 52-week highs and lows. So you can see we just hit 52-week high with the state ones at 50.58. So, things really been bullish. Santa Claus, I mean, really, it's been since the end of October. Things have been pretty much straight up, but it seems like we're leveling off. Let's take a look at the market pulse here. So this one's just simply under sector analysis, market pulse. So right now I have all the states. So we have 1 and 8 here. So you can see state one's at 50%, state one's all the way down to 11. As far as sevens and fives, we had a good transition this whole time. So we had the sevens come up and then the fives follow through. And then, the ones just kept climbing. So most of these went from, 8 to 7 to 5 to 1, because we are back here this is November 1st. So 2 months ago, we were at state eights at 63%. Now they're at 11, just like a massive swing. And that's pretty much, I would call that the Fed, their messaging for 2024. Obviously overbought at this point, from here, 2 months pretty much straight, almost straight up. So I would expect, healthy markets for these twos to start picking up, and, you just can't go straight up like this. I would expect a pullback, for a healthy market. So the twos are pretty much flatlined right now, 2%. So we'd expect some of that 50% to go in the twos, and maybe some of the 7.5s to drop to like 8 and possibly 6 or 4. So that's what I'd really be watching, the twos, and seeing if the pie just keeps going up. But one thing I did want to point out, let's get rid of that one. That one. Last time we were this high in state ones was a long time ago, which is a good sign overall for the market. Right back here, we were at 51, so it's 2 years ago about. Last time we were this high in state one. So after that, we pretty much went into a pretty bearish market until things start to turn around, you know, uh, kind of middle of 23. But, definitely been a bumpy ride since 2022 overall. So, if we can start getting these 1-2s and indices, obviously that'll be very positive for the market. We're getting highs, so the lows down here are pretty much flat line, which is a very bullish sign. If a majority of things are not in 8, then we're not going to really be hitting a lot of new lows. So that's where the new lows happen, outside of a few crazy earnings results or something like that. But pretty much flatlined and getting the bullish moves. We started getting it here, kind of reversed, had a big spike up here. Just kind of like same thing with the state ones. Last time we were up there, it's pretty much November. That's the last time we were up here as far as state ones. So I just want to see those lows kind of continue flatlining, and the green kind of moving up and down. That's obviously very bullish, but at this point we're just very overbought, and we've had a 2-month run. I would expect at least slight pullback near term. So let's look at bullish bearish. So obviously 80 kind of plateauing up here. Back here last time we got up this high, pretty much 80 was the peak, 82, 83. So we're 83, 84 kind of range. So you can just watch this day by day and see how things turn over. The one thing I did want to point out, in the new UI, we have different pulses available. So you can see, I'm into all symbols. So it's 4,000 some symbols, but you can go down into different ones like Russell. We don't have all 2,000 in the system, but it's just I think it's over 1,000 something. I don't know the exact number, but we don't have all five. We might be missing a few of these 500, and then I think we got all the Dow, but and then the sectors, we just pull those and update those so you can look at different sectors and stuff like that. And if you want to look at like XLK, you can pull up that pulse for states or bullish bearish. And then you can also overlay that. You have to change it manually. That you can pull up that XLK too, if you want to. So pretty cool little features. So if you want to go a little further analysis on different sectors and indices. So all right. Any questions on that? Okay. All right, let's pull up SPX. So been a really good state one, hit the target 3. You can see right now we're 33 days into 43-day average. So it's another 2 weeks on average it's in there, but obviously already exceeded what the average move is. I would say the key is this target 3 as usual. So obviously got above, down below, popped above a few days, and now we're back down below. So this level is kind of critical. I'd say acting like pretty strong resistance. So if we want to get higher, close and hold above there, and make another kind of run up if we can get above there. But otherwise, if this acts as resistance, then I would expect like a fall off to 2. We're kind of mid-range as far as 46 to 5,000, kind of middle range of things here, but that's kind of what I see obviously, if we get out at one, we'll go to two. That's pretty much like a guarantee, 95%. So, but obviously been a good state one for SPX. You can see here, well above 50 and real far above 200. Um, I did want to point out we didn't make all-time highs and we were real close. So that would be another kind of resistance level I would point out. So the all-time high was back here, 48.18, I believe. 48.18 was the highest, yeah. So that's going to be, pretty good resistance. You can see it, try to get up around 48. Had a turn the past couple of days. So right now, where we're at is, let me get the lines here, 46. That's the bottom of the range, and then the top, not pictured, 5,000. So that's current range right now that we're in. So if we do pull back, I think the key thing to watch is that 4,600. Obviously, for the bullish people, bullish camp, we want to hold that 46 and not drop back down into this kind of 46, 42 range. So if we do pull back, that's the thing I'd be watching, 46. And to the upside, just staying above target 3, then anything can happen. Obviously, if we can get back above there, hold, we could have a good run. But everything's kind of pointing to the like point, at least market pulse and all that stuff's kind of saying we're too overbought. We need a little pullback. So that's it for SPX. We got Russell here. So state one on December 19th. That was right, basically our last meeting that we had. It's had a little run up. Obviously, I think the key is, the range we're in, 19 to 2100. So you can see target one, target two is pretty much 2100, which is top of the range, which, is going to be pretty strong resistance. All those ranges have been pretty, strong as far support and resistance. 19, 17. Now we're up, got kind of close to 21, but still, I think this one's also, right now we're below the entry price. I don't know why they changed these. So that's your entry price. So, it's kind of went up, came below. So we got to get through that level of resistance. Not super strong, but obviously this level is going to be real strong, 2100. Obviously down to the bottom, 1900. And then, you also have your stop loss between there, 1962. So that's kind of where these things are laid out here. Layer drawings, close. Okay, so big chart for obviously above 50 and 200, well above. I mean, this move is pretty crazy. October 27th is straight up until December 27th, pretty much 2 months on the dot. Turned over a little past few days that were down again today, but it's starting to look a lot like the previous peaks, right? I mean, this is pretty much straight up, right? Straight up. This one was more a little gradual. I mean, these obviously had some straight up parts to it, but this one straight up. Obviously, we got past all three of these what were lower highs, so now we have a higher high. But it's looking a lot like the other ones. So just be careful of that. Obviously, we're well above, kind of this 19. Um, Let me clear this and get it a little tighter in here. So let me do the lines. That's 19. Top would be 21, obviously. The previous one was down here, 17. So pretty much smack dab in the range. I think, obviously a little lower today. Um, so, if we do pull back, same thing like with SPX holding 46, we got to hold 19. The previous times, kind of came back, messed around with 19 and then finally failed. This one dipped, came back up. Um, so holding 19 would be very important, for the bullish case. If we do pull back, which this seems likely at this point. So who's it? You know, kind of working against the market at this point. The 10 years kind of creeped up a little bit, up near 4. We had a huge drop with that from 5 down to like 3. I think it was right around 375. So kind of climbing back up a little. We got a nice trend here. Looks like, that at least downslope's been broken. So obviously we want to keep our eye on 10-year. Any kind of movement up, and that's going to be headwind for stocks. And the higher we get, the more the headwind. We get up near 5. That's obviously bad overall for markets. Crude's kind of holding. So those things have just been working a little bit against the market. But we'll just have to keep our eye on 10-year, obviously very important. So let's talk about the Fed. All right, so here we are. Um, I just pulled up end of year first, just to show you, like the median is now 1.5% cut. A month ago it was a quarter point higher. And this has been slowly moving lower and lower for the expectations. I did find a pretty cool chart. So this is the Fed calls as of the beginning of this year from all the major banks. Thought it was interesting to put out there. I mean, it's all over the map. But this is, total cuts for 2024. So, the lowest is 50 and then highest is 275. It's almost 3% cut. And, that's UBS. I was telling Joe that's probably wishful thinking from them, because they have a lot of bad debt on their books. But, all over the map as usual. The other column here is the expectation of the first cut. So quite a few March. I think the latest would be July. Everything else somewhere between March and July. So obviously there's nothing. I mean, there's like 8% or something like that for a cut in July. I wouldn't expect that as of now, but we still have time. We're still 4 weeks away. March, here's your first uh, expected cut. And then, as we go through more and more cuts, it kind of moves down. So right now, this July's, you can see about, almost 1%. So big expectations for cuts. And, if those don't happen, it's going to be quite a shock to the market. So keep our eyes on the, inflation readings. I still think it's possible. We talk a lot about the money supply and CPI. As long as that holds, then I would expect these cuts to come through. If they doesn't hold, if inflation is still resilient, um, then it's going to be quite a change for market expectations. And we've been through that exercise a couple times with these Fed hikes, Fed cuts, and all that stuff. So, think the only other thing, balance sheet kind of slowly, nothing, kind of like a trend line, just holding to that. So I think another thing kind of just keep our eye on is, do some research on, these government, auctions, U.S. Treasury auctions. I've seen that, this year we're going to have, I think, another trillion of extra debt put out there. So that's a lot of supply. Um, just something to keep our eye on. Even if Fed cuts, if there's not enough buyers, those rates could still go up despite what, the Fed does. So, if they keep flooding the market with, debt. And, I saw another thing about, I think that the interest on the U.S. debt is now the second biggest line item in the budget. Social security is number one, then debt, and then it's above defense spending, Medicare, a bunch of other stuff. So it's I keep on this path, it's going to be number one, and just like overtake, it's going to be bad. So okay, nice gloomy note to end on. Any questions, comments on market overall?
Hey, Josh Lee.
Yeah, Haley.
Hey, back on the Fed interest rate cuts,
Yep.
I thought we had said at one time earlier that if they started cutting early, and back then March would have been early, that it would be a bad sign for, let's say, something bad was out there happening, and that's the reason they would lower.
Mm-hmm.
Like
Right.
it. So, do we still feel that way? That if we get a March cut, that it's going to be not good for the markets?
Well, you remember that old chart we had with I forget the name of it. Basically, it was like the interest rate cycles with the Fed. I was trying to remember where that chart is. You know what I'm talking about?
Well, and I remember the one where if it got up to 4.5, 5%, then
Hmm.
business really fell off. But that may not be the one you're speaking of.
Yeah, that's one of them. But another one was like Fed hiking cycles.
Hmm.
Let me see if I can find it. Pivot chart. Here's one of them, right? So when they pivot, things usually, something usually breaks.
Yeah, I
Um,
remember this now. Yeah,
right. So, I
that's
mean,
scary.
this, obviously, it wasn't, um, it's not like a guarantee, but, a lot of the time something had broken, right, in the economy, banking, .com, all that.
Yep,
So,
yep,
I mean, it's possible to have a soft landing, right? But I mean, historically, usually, they'll pivot when things break, but you know, they uh they haven't guaranteed, they're gonna, you know, uh, cut at this point, but they're still data dependent and all that, right? So
right,
it's no guarantee, I'd say March, a lot can happen in 2 months, but 3 months, what if they don't start cutting till July, I don't know, just depends on what the Fed does and how long they hold it up here. But yeah, this is, historically what has happened. So, unless if something doesn't break, I mean, if they somehow manages, great. I think that's what we all want. But um, I think the other one you were talking about was the rising rates. I think it's in the share drive. It's hard to find. I have too many things in there now. Interest rate and equities. Yeah, I
there you
can't.
go.
Yeah, this one.
Yeah. But we've backed off that high interest rate. We're back down to what, 3.8 or something like that right now.
Right, but there's no like I was just talking about the I just downloaded that. I don't know where that went because I can't rotate it in this. Anyway, it's like basically, right around 5%, gets
Right,
ugly for equities. There we
right,
go. Um, so we did get up to right at 5%, right? And I knew it was getting
right.
ugly fast.
Yeah.
Um, counterclock. There we go. It was
Mm.
harder than it should have been. But it seems like um, it seems like the Fed's done raising rates to me, but it doesn't mean they're not going to hold them there for longer than people expect, right? But
Right.
just because of what the Fed does, like I was saying, they're pushing so much more debt. The yields, those go off of, auctions, not what the Fed has out there, right? So these could really go higher, despite the Fed cutting, just because they're putting out an extra trillion in US debt,
Yeah.
bonds and notes and all that stuff. So that could be market pushing 10-year a lot higher, even though the Fed, had cut rates. So that's the biggest thing I see, concern wise is, all this new debt, and how the market's going to take that. If some of the uh, bigger countries stop buying it, could get pretty ugly as far as yields. No one wants it. I mean, at this point, it's not an issue, but could be, you know,
I,
if
I
they
thought
run
we
it.
I
Mhm.
thought we were pretty much there. I thought China and Japan had seriously slowed down the purchase of our bonds.
I think China has. I don't know if Japan.
All right.
I think China has, but yeah. So yeah, that's kind of the big thing I see. Market risk, outside of like war, obviously. Um, yeah, that's kind of the biggest thing I see.
All right.
That's why, I keep harping on, just watching that 10-year. So,
All right.
uh,
Thank you.
yeah, that answer your question?
Yes, it was good.
Okay. Sorry, it took me a minute to find this stuff. Yeah.
You
All
did
right.
well finding it, Josh, with all you got packed in there.
Yeah, there's a lot. I'm gonna clean up that folder. Okay.
Like
Anyone
Lee, I had
else?
heard something.
Hmm?
I just had heard something similar that Japan also had, started to kind of slow down, their investment in U.S. debt.
Hmm. That would be a problem. Yeah. It's all about supply and demand on that 10-year. Of course, we never know what, if, just given the Fed's track record, right? If demand dries up, there's no reason they can't just go back to QE and just buy it all up again. So, if things get real bad. So, just a thought. Anyone else? Questions, comments on the market? All right, let me I think there's only one. There's a couple trades that came up the other day. So we have one bullish pre-runner. It's a bank. Um, Synchrony Financial bullish pre-runner. So that entry is on the 27th, just started out. So the earnings are almost a month away. So we'll keep our eye on that one. And then there was two, I believe, yesterday. Yeah, AXP, both these are confirmed, and Capital One Finance. So a lot of financial leases came in yesterday in the second, so just started. As far as the new system, I mean, you can just come and you can pull up earnings trades here, the plan, earnings scanner. Yeah, this is the analytics where you can look at all the different charts for companies. Like same thing with these are the daily trades we call them proprietary trades in the system. And yeah, so we think it's a lot easier. If you guys have feedback or you find anything missing, you guys are kind of like the test subjects. Um, with the new UI, if something's missing or out of whack, just please let me know. Other than that, any questions before Joe gets going? Okay, I'll hand over to you, Joe.
All right, Josh. Thank you. And Happy New Year to everybody. Let's see here. Let's see. Can you see the screen, Josh?
Yeah.
Yeah, Josh did a run through of the new screen, which we've been introducing for a little while now. Just one kind of refinement in the unusual options activity that had been in kind of a disjointed order. The order at this point, and again, the list consists of those symbols that trade 3 times or more their average daily volume. And the order of the list now is the magnitude over that 3 times. So just as an FYI. I just have a few charts I wanted to go through, and I just thought I'd start with the one that we've talked about as leadership for the market first. XLK. Well, actually, let me go back to the home screen again, just with regards to time. We've been talking about this for a solid month or longer, and XLK at this point is banging up against its average time frame. As I think we're aware at this point, a little over 40 days. XLK was first to go into state one, coming out of the October 27th lows. NDX, was next, and we're, a day from the average there. So from an average time perspective, it seems as though, in addition to the magnitude of the run, maybe it's time for, a little bit of a pullback, and that's what I want to go through. Basically, some levels that we can expect, for, re-entry if that's what we're looking to do. One other thing that we can't forget is, and I'll actually go to this chart first, there's TLT. This Friday, we've got non-farm payroll, and non-farm payroll certainly, was a catalyst for this run. It was basically November 3rd when that number came in much softer than expected, and basically, the market just confirmed those October lows and, has been off to the races ever since, into the end of the year at least. So, I've seen an expectation for Friday's number, a range of 150 to 170. So, we'll see where that comes in Friday morning at 8:30. TLT, has obviously had an awful good run. I don't pay too much attention to these numbers, Josh. We haven't talked about this in quite a while, but, bond market obviously is going to be awful important for, future direction of stocks in addition to earnings. We've got that 7 and 5, and basically, Ashok's algos are suggesting that state one is the next most likely state projection at over 50%. So already had a heck of a run there. We are up against time, I think. Yeah, we're basically at an average time frame in TLT. Also, more than the average move in a state 5. So I think TLT really bears watching in terms of which next state this thing transitions into. So back to the charts then. Leadership XLK, we basically ran, and overall, if I may, before I guess I get into some of the retracement numbers, from the October 27, 28 lows, the strongest index was Russell with a 27%, run in the index. Interestingly, and not surprisingly, NDX and XLK both ran 21%. SPX, pulling up the rear at 17%, in the course of 2 months. So pretty amazing stuff. XLK currently trading around 186. We had talked about that, some breakout levels to the upside, which obviously it exceeded, but downside retracements, I think, bear watching here. So XLK, we're 186 as we're talking. 3/8 retracement of the whole move will be in the neighborhood of 180. So I think that, that's an important level to keep an eye on at this point. XLK at 180. And let's see, we go back to these old highs. They were, basically right in that general range. So, not too much further, and certainly very, very quickly. So, basically in the neighborhood of 180 or, 175, 180 level from a retracement perspective, I think bears watching with XLK. In terms of its, Josh often talks about, the wave. We get an up wave and then we roll down and then up again. Matching retracement levels, this 180 level, happens to be close to, the support of, target one here, target one, basically 181. So it'll be interesting to see whether, these targets to the upside actually turn out to be support on the downside, as we go through a retracement here. Next is NDX. Again, NDX rallied 21% too. The trading now around, just over 16,425 is where we are right now. Basically, the index, ran from 14,000 to darn near 17,000. There are two things we can kind of look at. We can look at, and I had these charts up earlier and then they blew up, sorry. But, we've got this last run here, so you can do retracements. But I think bigger picture is worth keeping an eye on. And so, the 3/8 retracement in NDX is basically 15,900, 16,000 in that neck of the woods. That would mean, really another 400-point pullback from our current levels. Not insignificant, but so whether that's coming, I think, Friday's non-farm payroll may have a lot to say about that. So essentially, the short-term retracements are really more in the 16,350 range. This last little leg. So, we could hold that 16,350 range. If we break that, you got another retracement down around 16,200. And as I said, the 3/8 retracement of the whole move is 15.9. So that's quite a ways. In terms of time, we pointed that out. We're basically at average time. We exceeded the move in terms of the average move. And, let's see if, some of these, lower levels, the 16, the target 1, target 2, see if they hold, to the downside. Same thing basically with SPX. SPX ran 17%. Right now we're basically around just over 4,700 in the SPX. A 3/8 retracement would be just over 4,500. So again, quite a distance from here. Another couple hundred points in the SPX. So 4,500, 4,550 is that retracement trade range that I'd suggest keeping an eye on if you're looking to, for an entry point in the market, with some of the bigger stocks, time wise, we may have a little bit more time here, but and the target levels are above those retracement levels. And lastly, just the Russell, which ran a ton. Josh, went through some really good analysis here. The top of this gap is 1946. That's the first thing to kind of back and fill to close that gap. So I think that's certainly something to keep an eye on, that 1,946 level. Kind of interesting and not that rare. Josh was focusing on the 1900 level, in the SPX, and lo and behold, the 3/8 retracement of the whole move is essentially, and that whole move being this 27% run is 1900. So as Josh, I think, correctly pointed out, that may be the biggest level of all, but we got awful long way to go. I guess we're around 1980 at this point. So I guess as volatile as things are, that's not too big a deal. But closing that gap at 1946 first is the first thing. But that 3/8 retracement of the whole move would be 1900. And I think, again, as Josh pointed out, if I had to pick one thing, that's probably the key. It's this Russell, we back and fill, hold that 1900 level. So, from a time perspective, that's one thing, as Josh pointed out, we're below where we entered. State one of the Russell was very late to the game. So this is suggesting we have a long way to go, but maybe we have that long way to go in a downward move. So they were the charts I wanted to run through, just, talking about some entry levels, for the various indexes, if that's what we're looking for. Again, NDX about 15,900, SPX, basically 4550, Russell, that all important 1900, and we'll see if XLK can hold 180 to mirror the important levels. So happy to take any questions if anybody has any. Not go back to Josh. And for next week's meeting, I haven't seen any real earnings revisions out there in terms of overall expectations. There's still talk that fourth quarter is going to be double-digit earnings growth for the S&P 500. We'll see. But between now and then, I'll try to do some homework to see if any of that has changed.
Okay, thanks, Joe. All right, anyone else? Questions, comments before we wrap it up? All right, we'll do it again next week. Thank you all. You guys had a good holiday. Thank you.
Thanks, Josh.
Thanks, everybody.